Hi, my name is Gabriel Jarrison, and in this video I'd like to tell you a little bit more about what I look at when I'm investing in a startup. So of course this is not a full list of everything that I'm going to be studying and looking at when I'm investing, but those are the main things that I will be looking at in the beginning, the very first things that I want to check. And there's 9 points. I'll go over them right now with you, and I really want a startup that I'm going to invest into to have those 8 points really checked. If just one is missing, then I'm not going to invest probably right now. So obviously the first one is the team. It's always the first one, and I know it's kind of heard 1,000 times, and you've heard it so many times that the team is the most important, but it is also very true for me. I'm lucky enough that I meet at almost 10 new founders every week, and I've been doing so for almost 10 years now. So with time, I've really learned to not read people, but to really know what I'm looking for in a founder. There's different types of personalities that I think make great founders, and I'm really looking to kind of see if they fit into one category or another, and really understand more about their motivation. Are they going to be out there grinding for us investors in the long term? So team is always the first thing. The second thing I'm looking for is the unfair advantage. You've also heard that before. What I'm really trying to answer with that question of the unfair advantage is there's usually a number of startups addressing the same problem. And is this the guy that I'm looking for? Are they going to be the winners in that category? If you pick the wrong horse, then you might invest in a great idea, in a great market. But if they don't have an unfair advantage compared to the competition, those guys might end up losing. So I really want to bet on the winning team. And usually the winning team, there's some sort of defensibility. It could be, of course, IP or patents. It could be relationships. It could be a secret trade. It could be a lot of things. But I'm really looking for the winning team. And this is the unfair advantage that I'm looking for. Then I'm looking at the market. Of course, I want a market that is huge, that is growing. I'm also really interested into markets that are small right now, but are going to be huge. A good example of that is I've made a few investments in the cryptocurrency space. It is rather small today, still today, rather small. But of course, when you understand what's behind it, the potential and the usability of the tool, how the tool is superior to any other tool out there, you know that this market is going to grow in the next 10 to 20 years. So it's a good example of a market that is small today but will grow. After that, I'm looking at scalability. It's pretty straightforward for an angel investor. I almost always don't invest in physical products. I might have some exceptions for exceptional founders with exceptional products, but usually I don't invest in physical products because they don't have the same scalability as digital product. Could be an app, could be a SaaS, could be a website, could be a marketplace. But those things scale like crazy. And by scalability and scaling, what I mean is obviously I want the revenue to increase exponentially, but I want the cost to remain a constant. And if this happens, of course, then profitability and margins will increase over time. And this is very good for us investors. I'm looking after that at monetization. There's a lot of startups that don't make money today, and that is an issue for me. And this criteria would mean that I would not have invested in Facebook, because when they raised money, they were not making money. So of course I would have missed a very great investment opportunity, but you have to understand that 99% of the startups that do not monetize today and say we will monetize later, 99% of the time they end up failing because they don't have enough cash. Facebook is kind of an exception, and it's a very good exception for investors. But I want the startup to have a way of making money right now. Otherwise, I'm not going to invest in it. And this is kind of a safeguard for you and I as investors that this company is going to be able to sustain itself and grow in the future. After that, I'm looking at margins. I talked about it very briefly before. Making money is good. Making margin is much better. Margin is what the startup is going to use to reinvest in its growth. Margin is also what's going to be used for paying dividends to shareholders. And margin is also what's going to be used to create the valuation of the company. Most of the times, it's margins and not revenue. Many people talk only in revenue, and revenue is good, but margin is also quite important. And this is something I look for very, very carefully. Last two things that I look at, and I mean, this is, of course, as I said, a non-exhaustive list. traction. I want the company to demonstrate some sort of traction with its customers, to really see that there's a huge demand out there and it's growing and the company is able to address the market in a bigger and bigger way. That's one thing. And the last, of course, valuation. I want to invest in a great deal. I want the valuation to be correct. I want the valuation to be right. There's so many great companies that will offer you to invest, but the valuation will be crazy. So, of course, many times, if the company is of interest to me, I will try to negotiate it down. And if there's no way of negotiating it down, then I might pass on the deal. Because, of course, if it's not meant to be, it's not meant to be. And if the valuation is bad, then it is a bad deal right away from the beginning. Even if the company is great, if you don't have a good valuation, if the valuation is too high, you might end up not making money even with a great company. And that's, of course, not what we do. Why we do this. We do this to make money together. So those are the main few things that I look at very rapidly. Those are the criteria that I use that to when I make an analysis of a startup, when I do it on my YouTube channel, and when I just look at the company. Those are the 8 first things that I look at. If those things are checked and are good and look well and promising, then of course I'm going to go deeper and ask a lot of questions and potentially meet the founder face to face and go much deeper into the thinking over the business and seeing it in more depth. So that's it. If you have any questions about that, I'd be happy to discuss it with you further. Don't hesitate to reach out, and let's talk soon.